Another week, another candle. This is the weekly market forecast, and look at this ugly candle that we had in the stock market. But even the crypto market started to have a bloody weekend. We're going to talk about all that coming up after the intro. What's up, guys? This is JC, and welcome to the Wealth Engineering channel. The more you pay attention to, the more aware you become. And in this channel, we pay attention to stocks and crypto to find the best place to grow your portfolio. If this is something that interests you, I want you to smash the like button, subscribe, and click the bell. The first Sunday of every month, we do a monthly forecast, and every Sunday after that, we follow up on this prediction to see if we're on or off target. We had a lot of action this week in the stock and crypto market. Even gold had a rough week. You came here for the truth. Let's just dive deep into it. So this is the chart for the S&P 500. We had a bearish week. Now, remember what we talked about 4 weeks ago, and I circled this saying that, hey, this is a bearish engulfing candle. And when we see this, even if we get a bullish candle after, this is one of the early signs that the market is heading towards a reversal. All right, I did mention that. I'll find a video and put the link somewhere so that you can go and watch it again. Now, after that, we had a very bullish pattern, but then look at it again. It's starting to be bearish, but something else is happening. That curve is starting to happen, and you can see it very well on the moving averages from 8-day moving average, or actually the 8-week moving average. And then you can also see it on the 21-week moving average. You can see that the curve is barely starting to happen. But if we switch it from a daily moving average, we are very close to a bearish cross. All right. So this is a dead cross. Well, it's actually so this is a bearish cross on an EMA moving into a 20 average, and that symbolizes that we're gonna have maybe a medium to long-term reversal. Last time we had a cross like this, there you go. It lasted a couple days and then it went back up again. Here you go. It lasted more than 7 days and it went back up again. So if we get a cross next week or early, let's say Monday or Tuesday, then we might have an entire week all the way to, let's say, March 15, where the price are heading towards lower. It's going to be very interesting to see if we go retest this area right here, and also the part that we need to see is, do we get to retest this level right here? Because if we create a lower low and this retest, then we will officially have a reversal, and we also have a downward pattern. So I'm going to leave this line right here. And what we need to look for is we need to see what's happening with the price. We need to see if the price is going to use this as a support and we bounce back up, or are we going to break that support and heading towards that huge megaphone pattern that we are in. So you guys know, if you've been following my channel for a very long time, you know how I feel about this. On a long term, I do feel like this is a bearish divergence and eventually we need to correct. I believe this correction started already. All right. And I think we're just seeing the early version of that. If we put the RSI on the weekly chart, we can see that not only the bearish, but we have a nice rejection here, right? 1, 2, 3 different rejection of that line. And now we're well underneath that rejection point. So we're definitely heading downwards. And I estimated that by the end of the year, we're definitely going to reach the lowest point on the RSI, which will create a lower point than this. All right. So that is my long-term approach on the stock market. But it was very interesting to see this. Next week, something else might happen. We might see another correction. We might see the price started to rise above and create a higher high again. That could very well be possible. But on the long-term trend, I think we're heading towards a retest of this red line right here. And if we break this retest, it's going to be very, very bad for stocks. So keep your eyes on this. Wait and see what's happening. As for me, Monday last week, I closed all my stocks position and I'm all into cash. I actually transfer most of this cash back into cryptocurrencies. There are some cryptocurrencies that I want to double down, especially with this dip. I want to buy a lot more of it. So this is something I'll talk about in my exclusive groups for the students who sign up to my courses. So if this is something that interests you, make sure you check it out. The links will be in the description below. Very quickly, I want to talk about crude oil. So crude oil stocks have been soaring lately. We're heading towards nice resistance point here on the overbought area, which is why I have it green, which is why I have it red, but it hasn't crossed this yet and it haven't touched this yet. So there might still be room to grow. Something else is happening. I drew this triangle and expecting to see a big move. We broke the triangle, but the move wasn't as strong as I was expecting to. And the reason why is because the RSI is already over high. So I think we're reaching the top of the oil bull run that we were having, because this sector right here is a major sector for oil. So what we could see maybe a resistance. It's trying to retest this line again before it start reaching the next resistance, which will be here, right? So that will be the next resistance for the oil stocks and anything that is oil related. If we officially break this and have enough volume to push back up, I think we can reach 72 for crude oil futures. But after so much rally on the upside, we need a break. So I think what you might see is, since we broke this line, we might see some fluctuation around this line for maybe 1 or 2 days or 2 weeks. And it's going to pump back up again because the fundamentals are actually in favor of oil stocks lately, when the market is entirely going down, but these stocks are actually going up. But we never know. I would say word of cautions. Don't keep long-term positions. We realize where we are in the cycle. We're very high, all right? And I would say watch out for some correction as well on all markets, including oil. Gold was pretty bad. Again, we talk about the cross that happened here. You can see that the moving averages are pushing the prices down. Lately, this week we actually try to have a small rally on the way up. This is normal, but the overall trend is still downward. We can expect to see, all right, a hit on this orange line right here, and then another rebound so that we can hit this line. Now, what we need to watch out for is that white line right here. We do not want the price to break this white line. If you can get your hand on gold right now, this entire price that's going down makes gold coins and gold bars super cheap. This is something that I'm actually looking into buying for my newborn son. So the prices are actually amazing right now, and it won't last that long. So if you're interested in gold stocks, definitely look into it. Man, you can see it's pumping as we speak. So that's interesting. Let's put it on a daily. Look at that. Look at that bullish candle. You can see every time there's a dip, we have a similar bullish candle like this. So I think that's what's happening. So the traders are seeing this and they're starting trading it so that they can rally it up. But the overall trend is still downward. So that's something to see. And you can see the RSI is really validating that trend. Nicely rebouncing on this yellow line right here. You can see the MACD also having nice momentum on the downward side, and it's picking up strength on the ADX. So we're nowhere close to see a bull run yet on gold. The gaps here is too wide open. You can see higher high, with the yellow line picking up strength. That means the momentum on the downside for gold is picking up strength. So it's not looking good for gold, but at the same time, it's making things cheaper when it comes to gold stocks or gold, actual physical gold. So check this out, hey, Bitcoin. So last week we were talking about a cross that was happening. It turns out that it actually did not happen, and the market corrected itself. To be honest with you guys, I'm happy that I was wrong with my prediction. It's better for the market when we don't have these crazy jumps on the price, and we need correction. It's more healthy for the market. Now Bitcoin is dropping all the way to 45,000. This is great. That means if you wanted to load up on your cryptocurrencies, this is the time to do it, you know. And when it comes to Bitcoin dominance, it's going sideways. So that means there is an internal battle between the price of the altcoins going lower and then the price of the Bitcoins going lower at the same time. And some altcoins are also going sideways, and these altcoins are probably high cap in the big cap sector. So that's why it's going sideways. Technically, it's a good thing, I would say. Definitely we can put it on this chart right here and see what's going on. We're almost at a cross on this chart as well. You can see that this is happening in the entire market. And if this happens, we can expect to see a challenge on this green line right here. I'm going to put this line red because if we break this line, all right, this is going to be very bad for Bitcoin. We can expect to see another price dump all the way to 30. Honestly, that's what I want. But hey, what I'll do now is actually remove this, and we're gonna have to wait and see next week when we do the weekly forecast if we actually got the cross. But this is going to be very interesting. The other thing that could happen is we could have a rebound from 40 all the way back to 50 again if we decided to reject this. Now, what's going on in the stock market is going to be very crucial with what's going on in crypto, because it seems that the stock market is crashing, Bitcoin is crashing, and the entire cryptocurrencies are not really going much. After so much time of pumping, it's very good to see this settlement and this calm period coming where the prices are going red. But we may see more of it, all right? Bitcoin might lose even 50% of what it was before and reach all the way there. So we'll see. But I like what I see. It's also a great opportunity for you to load up on your coins. Load up on your altcoins, load up on your Bitcoins. You can time your buys. The lower it gets, the more you buy. This is exactly what I'm doing on my altcoins. I sold all my stocks and then I'm putting them on my altcoins right now. I'm about 98% invested in cryptocurrencies. This is how much I'm doubling down on the cryptocurrencies that I believe in, because I know the upside is way more. But let's look into more detail what's happening here. So the BLX chart, we have a cross on the ADX where the red line is higher than the green. All right, so that means we're about to see more bearish pattern coming in, but the strength is getting weaker. And you can see the lines, and you can see the ADX line, the yellow line, is forming high, lower, high, lower, high. So it's forming a pattern where the strength is weaker, right? And then so we'll need to see if that continues to stay weaker, or if it breaks this yellow line and then go cross higher. Now, if it breaks this yellow line in strength, and then we have this red line above the green line, that is extremely bad for Bitcoin. But on a daily, now it would have to happen on a weekly. And on a weekly, if you put it on a weekly, and this is so interesting also. Look at what's happening in a weekly. We're still in a very bullish trend, all right, because the green is above the red, but we're also having a loss in strength, because now we're at very high in terms of strength. It's curving, right, and it's about to go down. So that is going to be very interesting to see in the coming days and weeks, to see if we're slowing down, if we're actually going to have an extended correction period. But that's what I'm seeing in the early signs of it, whether you put it on the daily where you can see the cross happen, or you put it on the weekly where you can see the curve and the loss of momentum on the bullish side. And you can see that we're starting to changing direction and getting closer with the gap in between the red and the green. So interesting, very, very interesting. Lastly, we're having the same pattern on the total market cap for cryptocurrencies. And look at this. This is a bearish engulfing candle on the weekly chart. Very bearish sign. Very, very bearish sign. This could symbolize a top of a rally. All right. And after so long of a rally, we can expect to see a correction of at least 30% on the total market cap of cryptocurrencies. If I had to guess, I would say very quickly, we can see something like around here. So we can drop around $1.2 trillion in terms of market cap. We're at 1.39 right now. At its height, we were at 1.7 trillion. All right. So this is a huge drop. And if we break this line, then the next line would be $1 trillion. I think we can expect to see $1 trillion retest. Actually, that would be very healthy for the entire crypto market. So some people are going to take a lot of money off on that correction. This is to be expected, but check out your cryptocurrencies, especially the one that you love to buy, because they could be on sale right now, and they might be on sale for the month of March. So keep your eyes on that. March is looking that we might get some interesting price for cryptocurrencies. But when you look at the overall pattern and the overall cycle for cryptocurrencies, the entire year we are going to be pumping. So keep that in mind. Always focus on the bigger picture and see how the smaller curve and smaller cycles are interfering with the bigger picture. With that said, this is all I had ready for you guys today. We'll talk on next video.